Okay, so it's February 1st, 2017, and we're going to continue this, start this video here. So picking up from what you said earlier is that you're looking for stocks to go long because everything is shorting. This is important, this is one of those vital write it down lessons I'm about to tell you here. You always become a slave to what the price is telling you, to what the chart is telling you. Now, the reason why we short right now and we're looking for shorts is because the market in general has been at all-time highs right now. It's been breaking records for the last couple months. And when it does that, the majority of stocks that we're scanning for and looking for are going to be at highs, extreme momentum highs. And by our law, bull bear profit law, is you got to do reversals. Okay? Just because there's a lot of shorts, 100%. And if you think about what you just said, that's speculation. I'm tired of doing shorts. I want to go long. There are a few conditions where you can go long, but it's only if the indicators say it's time to go long. You know, and I have one I'll show you is setting up, but it's you know, you got to use the RSI indicator to figure that one out. So looking at this stock in front of us right here, as we discussed, you never go backwards, you always go forwards. And going forwards, this wouldn't qualify. We talked about that because there's no way near that this is meeting our conditions. So the you know, every day is, I'm really glad we go through this stock analysis of at least one or two stocks like we start out with, because this in itself corrected some gigantic potential mistakes that you could have made. Number one, always go forward, always find the biggest peak and equal and opposite of what's going on today, as of today. Hey, happy February 1st, by the way. So, you know, you pay attention to that. You know, and today we should be looking for stocks peaking up or collapsing down, because that's all we do. That's our number one method, is to pick those situations, okay? And if they meet them, then we do reversals. All of our stuff is reversals, as a matter of fact, you know, because it's just obviously emotion based. And so anyway, you know the point. I think you understand the point there. The other thing you talked about was entering in. Show me the problem you're having about adding a stock to your list.
Okay, so you can, when I go to, like, say I went to my practice, I made a new stock portfolio called Practice MACD PM200.
Yeah.
So if I try to add symbols, like, for instance, DPS, and I say, like, it's February 1st.
Okay.
They won't let me add it.
Okay, this is why. See how there's nothing in the price?
Yeah.
I'm going to show you something. Click Add Symbols, DPS, Dr. Pepper Snapple. Click on Dr. Pepper Snapple and make sure that it fills in the current price for you. So it should fill in $91.20. Ooh, it's not. Interesting. It has to do that. Why? Add symbols. Let me ask you, are you logged in? Are you logged into your free stock charts?
Yeah, let's see, sign out. And walsh.
Where does it say that?
At the very top of the screen says sign out. It says welcome and walsh and sign out. Click sign out.
Can you point it out to with your mouse?
Yeah, you see my mouse?
No.
You don't see my mouse?
No.
Okay, you see you see me highlighting? So you see the ad?
Yeah.
Right?
I see it. I see it. I see it. I see it. Welcome M Walsh. Okay.
Yeah, right here.
Yeah, I got you.
Very top right corner.
I got it. I got it. Let's try something else. That's interesting to me. Why it won't let you add it? All right, do this. I'll do it for you. All right, so when that happens, that's just strange. When weird stuff like that is going on, then I just restart software all the time. So let's try it again. All right, there it is. See that?
Yeah.
All right, you're good to go now. It'll work.
Cool.
What you always want to look for is that price being highlighted. You click add, and there it is.
Oh, okay.
Yeah. That's just spending too much enormous time on this stuff. So let's pop over. Let's switch sides here. All right. You see my screen, right?
Yep.
Okay. So we did that yesterday. This is today's stock review, which we're doing right now. Business plan review. And what links to SMT, CMT, stadium pitch, that's all a new type of training. I guess we can separate two different worlds, so to speak, but they're completely connected, tied together. One world is bull bear profit. The other world is the business side of bull bear profit, and everything having to do with it. Everything, getting clients, and also never ever refer to people as customers. There's a whole entire different meaning and approach and responsibility if you call people clients, and that's important. That makes people feel, and they should feel more taken care of, and with sincerity. We have an unbelievable product. People who purchase from us will be treated genuinely and have fantastic information to help them. It's all about their success, and all that does is create leads, so anyway, what this stuff is here, SMT, CMT, that's the terminology from Chet Holmes and Tony Robbins. That SMT was a sales mastery, and CMT was a CEO mastery training, and these were webinars. So what I did is I did videos of their live presentations that people purchased. People purchased this education, and I want you to go and sit through it to see exactly how these people actually perform their webinar. There's a lot to gain from it. You see their style, you see the slides, they're called slides, you see how they approach the whole education. It's invaluable. It really is, and it gives you real life training on how you approach people that are entrepreneurs, people who have businesses that are maybe under 250,000 a year versus CEOs that have businesses worth millions. There's a different type of approach, a different type of education for those type of people, and that's exactly what we're going to be doing. I mean, as you can imagine, when we're training people on stock education, if we do it right, we should attract from mom and pop groups to people who manage $100 million in mutual funds if we do it right. So having the right approach is everything. So I want you, so there's going to be a lot of homework, business type of homework for you. And I'm putting it together right now. And then one of the other things that I want to show you, which I can probably do right now, it's not like there's a special time for it, the report card. So Michael, what I did was this. Let me show you this. This should help people understand, and I want your commentary on this, okay? This is brand new. I started this yesterday, okay? So this is called, this one web page is called the Bull Bear Profit Report Card. And see how I have up here, there's tabs, January, February. So what happens here is trades will be added when trades are closed. I'll have tabs up here for the whole year. But right now, January closed obviously yesterday. So here what I have is a report card. The stock is CAITERUVV. It's in red because if you look below, it says the trades above are color-coded according to the methods below. So this method is RSI XM match reversal. I don't care if the public sees it because they'll have no clue what the heck that means. It's all stuff I made up, you know. So you can see that on this method our target was 2%. And if we're using the TSV X match reversal in yellow, target would be 1.5, PM200 D3 is 1%. So if you look, you can see the type of trade I did, our entry, our exit, the trade days held. This took 45 minutes. It hit my target at 2.05%. The next trade, I was in it for 1.5 hours. Target hit 2.03%. The next one was 1 hour. Target hit 1.69. Okay, and then using the TSV X match reversal, everything in yellow, you can see how these days were a lot longer, and I broke even. This was better than breaking even, obviously, 1.62. But these, when they get down to 0.25, 0.32, 0.08, I probably had to DCA. But anyway, what do you think about this? I want the public to see this so they have an idea that we're not, we walk our walk. You know, we don't just talk the talk, so to speak. What's your opinion?
That's awesome.
I mean, with this,
It's creating value. It's validating what's being taught.
excellent, excellent. What I'm trying to do, I talked about stacking the odds in your favor for profit. Okay? What I'm doing here is I want to continually give us both so much evidence and so much reasons to choose us and to buy our product. This is one more big tool of people say, yeah, this sounds good, but what are your results? I'm trying. It's called objections. You know, like people yesterday telling you, I don't want it, and you know, slamming the door or whatever. We want to get around those objections, and so what I'm trying to do is anticipate types of objections that people may have, and if they're that difficult. All right, I just had some alert happen. I'm not trading anything right now, by the way, but some alert just happened. Let's see. 14. So this is, I'm glad you like it, you know. I got little things like the little thumbs up here in the upper left. And then I have down here, this is the whole page. It's not complicated. It's just to the point. So this is the bottom of the page. So I have right here, it's not letting me, but the objectives for all bull bear profit methods below are listed in order. The objectives for all bull bear methods. See, I got to correct that. You follow? Yeah. Yeah. So the highest high and the highest high on this method is awesome. That's outstanding. And let me show you something really, really, really cool that is accurate. That is even reinforcing this newest method, the RSI and XM method. Is look at this stock here. This is one I traded. Look at how predicted. Look at how amazingly it predicted a nice fall. So you see over here, this was a pretty nice fall, but we wouldn't have traded it because it wasn't above 70, you know. So what I did was I marked. This is not PM200, by the way. This is not PM200. I marked the highest high over here, which was at 6.24. Then of course I came over to what was current, and then I went, okay, here it exceeds 6.24. It's at 6.47. All right, but this was discovered on January 21st. I know that because I look at my tracking date over here. I look at my tracking date, and I discovered it on it. Always, whenever you discover a stock, like when you look at free stock charts, your DPS, the one we just entered, it automatically puts in the date that you discovered the stock. I never change that date ever, because if I go back, I want to know, for example, this is a perfect example, I want to know when I discovered it, and I discovered it January 21st. Okay, so on January 21st, I'll move over to here. It's not exactly January 21st, but in this 3-day window, of course, January 21st was in that 3-day window. Technically, it was in that window. So this was really the first day I discovered it. When I discovered it, man, it was booming here, here, and here. And I entered this stock on this day. I traded this stock. And look how nailed it. Look at this collapse. That is perfect. That is perfect. It fell. It's already fallen 12.59% in 7 days. That's utopia. That's what we want. But what's really important also is, notice this. Of course, our world is this. You know, our objectives: don't take a loss, profit, or break even. Those are our 3 objectives. So if we're sticking by that, and we are sticking by that rule, our first entry would have been here. Okay? Let's pretend we entered here. And what did it do? It didn't obey. We didn't get our 2%, and it shot up. So on this day, we would have dollar cost averaged, our first dollar cost average at 75 bucks. And what did it do? It still didn't give us our target. It didn't fall. On the next day, it didn't fall. This would have been a number 2 dollar cost average right here. And technically, our profit point or break even probably is right in this area here. Do you agree?
Yeah.
Because all I'm trying to do is find the halfway distance between here and here. And to be exact, okay, so that total move was $7.55. So I would have went down about $3.50, $3.75. Or up, either way, $3.75. Right around there. I don't know if you're following me on that. I took the whole distance, I divided it in half, which would have been about $3.75, and then I dragged the mouse to the right, and I moved it up and down till I got a move of $3.72 is close enough for me. So and I'm doing, the only reason I'm doing this is to eyeball it really quickly to see if I would have broken even, and you would have easily reached the break-even spot, and you can't see it, but you just kind of eyeball it, and that occurred right here. The price fell hard right here, and you would have broken even right here. And that's if you had entered here, dollar cost averaged, and then boom, you would have been broken even the next day. But my trade, I actually ended up trading it on this day. And that thing, my 2% hit in like 45 minutes. You know, and I could have made more. I definitely could have made more profit on this day or this 3-day stretch. Do you follow that?
Yeah.
Yeah. So Michael, this is a little more thinking about your situation, thinking about what actually is going on, because just because you scan stocks doesn't mean it's going to land on this day or this day. I scanned it and it gave me an opportunity on this day, and believe me, your odds even get even way better if it qualifies here and it's still, the pressure increases more for it to reverse because it went up. The pressure is even more on it here that it's going to reverse. And another little telltale sign that it may reverse. See how big this move is from high to low? That's a pretty good move. This is even a bigger move, high to low. But this one, the buying has slowed down quite a bit. Meaning, and this is, now keep in mind, I'm slap me for saying this, but this is speculation. But because the buying has slowed down, it looks like there's a good possibility, especially with these indicators, that people are going to want to take profits. Okay? And you know what's amazing? This has fallen so far so quickly. It's literally gotten back to where we would have entered in our first trade, which was right here at 69.50. This thing obviously fell down to 67.35, well below 69.50. So this stock is a great example of how to think about entering your trades when you know that you're having a higher probability of reaching your target, and quickly, very quickly, we reached our target. So that was the trade I entered, and then the next trades I entered was a CAI, which hit its target. Anyway, these are the double lines that I was telling you as far as see, it hit the lower red line was my target. The upper red line, of course, was the entry, and it easily hit that target. And it hit him yesterday. TER, this is the other one. But see the importance, Michael, you see the importance, of course, of hit your target, it hit the target, it went a little bit lower, now it's climbing back up. The whole thing we want to avoid is if it takes off on us and it doesn't come back. That would hurt. That would hurt. But this is that's the importance of this. So all right, we kind of covered this extensively, and it's worth it. It's worth it. Call this repetition is the mother's skill. There's always something to learn, and that what I just told you right there was kind of the nuances.
So for RSI method, it's different because we don't enter a trade on a reversal. We enter at the highest peak, correct?
For this particular method that I'm showing you right now, which is the RSI XM method. XM is extreme MACD. All right. These are the rules as we're entering it as things peak while they're going up. But what you have available to you right now, the PM200, we enter in on the reversal. That's the objective. Enter in on the reversal for a PM200 D3 method.
Correct.
This method our objective is to enter in when the indicators are both, ideally, they're both peaking.
Right, they're extreme, like they're extremely being overbought.
Mm-hmm. Overbought is what this guy tells you here. And then XM is momentum, extreme momentum going up, blasting up. And that was the reason I entered the stock. That was the whole reason I entered the stock, is to take my little profit based off of the reversal that it looks like is going to happen. And of course they do. They do. Absolutely they do. Did I answer the question? Do you have other questions about this right now?
Oh no, that was the question.
Yeah, ask away, ask away, ask away. Always. If there's ever anything that's doubtful in your mind, you have to ask me. Because more than likely, if you're asking the question, you're going to have some client ask the question. You know, and the more you get it, the more you get the details. And this is something that, you know, on a one-on-one, and if you didn't know me and you're talking to a brand new person, you know, you definitely, the more you talk to them, number one, you're going to stick to the script. And you should be able to close just based on the script. Now, when it comes to live trading and people pay the, you know, the bigger money for an official Bull Bear Profit education, what I'm showing you right now, what it does, and you definitely may have to explain exactly what I'm doing. You got to be at this level, and it's you know, you're basically you're at a level that no one else is. You're the closest level that anybody is to what I've been doing for a long time, because you're the man, you know, and you need to be able to confidently explain these little subtleties, because these little subtleties will make you your target, or they're going to erase profits for a month or 2 months if you don't, if they're not explained right. And you have to get the right psychology, which is being a computer. That's the easiest way I can explain it. Just do what you're supposed to do and move on, and move on. So these are good questions you're asking, and the questions, and always ask, if you know, ask better quality questions. You learn a lot more, you get a lot more detail, you just get better. Bottom line, you get better. So what I want to move to now, we did a lot this is good, this is real good. We did a lot on the actual strategy, or the subtleties of the strategy. So if we come over here, we talked about report card, we did extensive stock review, business plan, and links. I have to get these links to you. So let me do this. I'm put a note to myself right now. We're going to switch gears and move on to like the business plan. One of the things here, there's a lot, like I said earlier, there's a lot of information. This is all training I paid for, actually, after I left Business Breakthroughs. I had training from one of their coaches, and this is what it's called the Core Story Elite Team Library. It's a bunch of really good audio lessons about building business. One of the things that I'll send you is this. Okay. There's a thing called Executing the Core Story Model. Really exceptionally powerful stuff here. All right, so why a core story? Real quick, before anyone starts the journey of writing a core story, they need to understand what a core story can accomplish. This is important because building a core story for your company or for building a business is difficult and highly technical. What follows is what Chet Holmes, the creator of the core story concept, teaches us about the core story. Research increases your knowledge. Learn how knowledge is power. Whether you're building a core story or simply looking to put together your collateral material, everything is more powerful with research. The more knowledgeable you are about your industry and the trends going on in it, the more strategic you can be in taking market share. So then it has what you like to do. And this, think about this, okay? Think about this right now about the water business you're in, and tell me if this makes sense to you. You would like to be positioned as an expert in the eyes of your clients. Dramatically upgrade the influence you'll have with your clients. Show market data that makes having your product more important. Get people to buy more and more often. Build information that positions you strategically above all of your competitors. Dramatically improve and upgrade the communication experience between you and your prospects. Build in a sense of urgency that makes your buyers buy faster. Create an unstoppable anti-competitive strategy. Breed more loyalty toward you over every other competitor. Attract buyers over all of your competitors whenever they see an ad, a brochure, a sales letter, etc. Research carefully orchestrated can do all this and so much more. Does that sound like what you would love to do for your water business?
Yeah.
I mean, it's phenomenal what this guy is. This guy is a genius of sales. So he created, this is what the core story does for you, and it was actually a product that people can buy. And what would happen was they would buy this product. He had this group called Empire Research Group. What they would do would pour through research on someone's particular product. If you had water, like your water quality thing, that would have been a slam dunk for Chet Holmes for business breakthroughs. And they would have looked at government data on what the effects of water quality in Albuquerque. They would have went through as much data as they can find and basically put together a marketing package that would blow the competition away, and it would position you to when you came to a client, you had everything you needed to bottom line make that sale. You would find out what their challenge is, or tell them what the state of their water's in. Anyway, it's a very what they call strategic approach. And then they use these things called tactics, very tactical tidbits of information to close that sale. So down here, what I want to add, this is actually a picture of the guys. On the far right, that's Chet Holmes. And then the picture next to that picture is Chet Holmes and Tony Robbins. Tony Robbins has those, So those are the guys. And then let's see here. This. I'm gonna send you this document. This is awesome. So let me send links, and then I'm gonna send the core story sales model. So this is the homework I want you to do, is to read this document, and you'll really start to get a feel. Now this is awesome here. This is awesome. What I pointed out here is what moves people to action is fear or doubt or nervousness. I'm going to add this line to what we're doing in different materials here. The 5 dangers facing this has to do with an employee. So like let me start here. This is an example. Here, I have a client who sells employee benefits and insurance to companies. His sales team would call up a client and say, "We want to come and talk to you about your health care benefits." Since 97% of prospects think they are happy with their current broker, That's a really hard call to make because they don't want to hear your call. You're just another telemarketer, in other words. So, however, when they created a presentation that pointed out, paraphrased, the 5 dangers facing all employers and how knowing what those dangers are can dramatically reduce costs and increase profits. Dang it, my mouse went crazy on me. Think about that one line alone. The 5 dangers facing all employers and how knowing what those dangers are can dramatically reduce costs and increase profits. That's what people ultimately want to do. Reduce costs and increase profits as a business. Okay. It made not just the sale go better, but also getting appointments go much better. Okay. It's the 5 dangers facing all employees. It's the wording that people it makes people pause and go, what are those 5 dangers? You know what I mean? And what I'll use it for us, it may say something like the 5 dangers facing all stock traders and how knowing what those dangers are can dramatically reduce losses and increase profits. It's just a changing of a couple words, but use his dramatic wording. And it'll be on the website, it'll be on like brochures, trifolds, and you'll be able to hand those things out, and the cold calling is like the kind of cold calling you would want to do is just simply Google in your area financial consultants, planners, and then look who's around in your area. Get dressed up, look sharp, have your pamphlet, business cards, and just say, hey, I'm in your area. We want to put together a presentation with, and name all their competitors. This is another very strategic move, is if you have, say, Merrill Lynch and LPL, Edward Jones, these are all well-known financial planners, that have like an actual walk-in brick and mortar store, and you go to them. What it does is it makes you. What this says here, it positions you to be a professional. It positions you to do all those 10 things, and it gives you the greatest possibility to get a call back, and that's where it all starts. Is getting a call back, getting as many eyeballs on you as possible. And if you think about it, that's why Facebook is a multi-billion-dollar company already, and they're so new. Generally speaking, they're a new company. And the reason why is because every single day, 24 hours a day, they've got millions of people going to Facebook, checking out whatever's on their mind, and there's where all those ads are. That's another big way. I'm putting a little asterisk. Another way we're going to market is on Facebook. And what happens is that there's I went to a class once that talked a little bit about Facebook, about you can market yourself and pinpoint people interested in finances. And so all of a sudden you'll see on Facebook ads Bull Bear Profits show up, where there is a specific demographic of people interested in ideally stocks or investing, and all of a sudden we should have Bull Bear Profit there. Think about that. Who knows at that moment if there's 1 million eyeballs reading our ad? That's powerful. But it's all from a business standpoint, is you're going to learn one of the best strategies in the world of how to do that. So this is a powerful document, the core story model, and then there's a number of other, I tell you, the SMT, the CMT, there's a thing called the stadium pitch. Let's see, it's core story right there. There's so much information. These are all, Best Buy. This is a really long, this is like an hour and some long video. Chapter 4 of the ultimate, this is, hold on a minute, this is a audio.
Becoming brilliant strategist. This is one of the sections I promise changes
this is really important. Remember earlier today I was telling you about the difference between not calling people customers versus clients. And this video is about over, and we can shut it down in a little bit here. But I just wanted to finish up with this really powerful lesson here. So he's talking about, like I said, customers versus clients.
Protection of an expert in a particular field. So you have clients, not customers. Buying a product or service from someone else. A client is someone who is under the
I'm gonna back this up so you hear it again.
increase your impact, advertising effectiveness, and ability to take market share by getting deeper and deeper into the concepts of education-based marketing. I could have written an entire book on just this one concept. I'll steal and build on a concept by J. Abraham. In the dictionary, a customer is someone who buys a product or service from someone else. A client is someone who is under the care, guidance, and protection of an expert in a particular field. So you have clients, not customers. How deep can you go to guide, care for, and protect them? The deeper you go, the more control you gain over your.
Okay, so that's over. So I have an enormous amount of stuff, that you don't have to go through every single one, remember it, but there's very important principles that I want you to understand so you get the whole business training. I mean, there's also, obviously, other than stock trading, you're getting some business training too. So what did you think of that guy?
This is like awesome stuff.
It's
This is literally invaluable.
and you know what's really kind of cool is you can apply it to what you're doing right now.
Exactly.
I mean, it's something. Yeah, it's off the charts. I'm really lucky. I mean, really, it's more than luck. It's just kind of like, I don't want to go on this today right now at this moment because I could, but it's one of these things where things just kind of fall in your lap, sometimes, and if you're not paying attention, you miss out. Your bottom line miss out. So I'm going to finish up with right here. This is this whole thing right here is literally the verbiage that Chet Holmes used to train people like me, which was, like I said, it was a customer relations manager, on what to say and what to do. So this is page 8. There's 21 pages. This is where I've got to pick up from. And this is, like I said, this is in summary. These are the scripts, and this is everything we're going to need to do, and that you're going to have so that it's in front of your face and you're ready to go when customers actually start calling. So, like I said, there's at this point we've entered the second part of what we need to learn, what I need to bring back, and what you need to learn is business, the marketing, the approach, the tactics, and all that stuff. Okay. So we can end this session now, and I think we'll continue on Thursday, if you can do it, Thursday or Friday. And because I've got a lot I need to do today and tomorrow, a lot. And then I'll send you this information. You're going to need time to read through some of this stuff, go through some of the video downloads, and I'll point those out. So any last questions or anything?
No, I'm ready. I want to learn.
Yeah.
It's all about learning.
Yeah. And then it's
digesting this information.
Yeah. Exactly. So we'll end the video here.